Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Gonna break down TLT for you guys, coming up here with an update. And we're also going to go over many other things too. We're going to take a look at HYG, high yield corporate bonds, the 10-year treasury, TNX, the US dollar, Dixie. All right, break it down so that you guys understand some of the current chart patterns and structures that we have. All right. Now, before we head further, I really highly recommend watching this video right here. I recently posted 2 days ago. It's an amazing video that goes over a lot of data that other people just really aren't showing you guys. And, it's some really high quality content there that I'm sure you all will enjoy. Now, when it comes to TLT, for the past year, we've been tracking a 5-wave bearish structure that will take TLT anywhere from about $80 to $90. Okay, so we have, and it's in orange, we have a 1, 2, 3, 4, 5. Now, the way these work is your wave 1, your wave 3, and your wave 5. Those are going to be 5-wave impulsive moves. And if you take a look, that's exactly what we've been getting, right? Our original wave 1 right here was a 1, 2, 3, 4, 5, and then that completed, right? Wave 3 over here, 1, 2, 3, 4, 5. Okay, so that's been following very well. Now your wave 2 and your wave 4, those are going to be what's known as corrective waves. And those corrective waves are an ABC movement. And that's what we've been getting, right? We've been getting an ABC move up and an ABC move up each time. All right, and we've been doing a good job of trading our ranges in here since I've really been posting these videos for you guys. Now, some important things happened, okay? We had question marks on the MACD. We were wondering, what's the MACD going to do? Is it going to give us a clear signal? And it sure enough did. We also had bearish divergence on the RSI right here, and we had a bearish channel as well, and we broke below. We had a breakdown of that bearish channel. So we had two really, bearish indicators right there. Okay, giving us some confirmation of some downwards movement. And we were also tracking a double top. Okay, we had a top here, and we're looking to see if this is going to give us an M pattern. Okay, and take us down to our 5-wave structure. Now, we'll go ahead and zoom in a little bit just so you guys can see things a little clearer. But what I want to highlight is not only are we using all of those, but we are also using the major Fibonacci retracement levels, okay? That's what these groups of yellow lines are right here. These are the 3 most common and well-respected retracement levels, and you use these because nothing moves in a straight line down or in a straight line up. You get a move down retracement continuation lower or a move up retracement continuation higher. This is how you spot trend continuation. Now, you can also use these levels to spot reversals. So if you move down, retrace, consolidate a little, and then break through your retracement levels, right, then you can potentially spot an upside reversal. But what we've done for over the past year is we've made a move down, retrace, continue lower, retrace up to the major retracement levels, continue lower, retrace, continue lower, and we keep rejecting our major retracement levels over and over again. Now we combine that with our MACD, and we can see that it combines with some very nice entries and exits. So take a look over here. All right, we initially come up to our 38.2% retracement level, and then look what we get. We end up getting a MACD sell signal, which is going to be this red line dropping below the blue line right here. Okay, and then what do you see? We get a nice impulsive move to the downside. All right, over here, we get another MACD exit signal. All right, crossing over after we hit the 50% retracement level and complete our ABC wave up, and that starts our 5-wave structure to the downside. Over here, same thing. When we were looking to see if this ABC was going to possibly turn into a 5-wave move and cancel out this structure, we were looking to see if we were going to get a MACD sell signal for some type of confirmation. And what did we do? We got that confirmation. So our ABC wave finished, and then we started our next round of 5-wave moves to the downside. So we'll actually zoom in just a little bit more. And now that we're zoomed in and we went over the overall structure that we've been tracking, hopefully things can be a little more clear for you now. So, remember, we were tracking to see if we're going to get an M pattern, okay? And that would look like this, all right? And that would take us down here to right around our wave 5 targets in between $80 and $90 on TLT. Now, keep in mind that we still have this trend line here. So there's a trend line that we've been respecting for a very long time. We broke out, bounced off of it very hard, and there is potential if we come back down, we could test this trend line again and potentially find support and head back up. Now, we were looking for a bull flag here. We were looking to see if our 5-wave structure to the downside was going to get voided out, and this ABC correction would turn into an impulsive 5-wave move to the upside. But as of now, things do not look that way. As I mentioned, we got our MACD sell signal right over here, okay? And you can see that we started to move down sharply since then. We've done a great job of rejecting our 61.8% retracement level, which is roughly 109.72. Okay, we put in that double top up here. And now we're currently above our 38.2% retracement level, which is 102.94. So that's going to be a really, really big area of support. And bears are going to have to take out that support and flip it to resistance in order to come down here and fill the gap. Now, that's what these blue boxes are all over. These are gaps on the daily chart, and these gaps, they fill about 90% of the time historically. All right, the big question is not if they're going to fill, it's when they're going to fill. And these gaps are useful tools that I like to chart up. And so that way I can understand where price action is being gravitated towards sometimes, right? Think of them kind of like black holes, all right? And the price is naturally going to be attracted towards these gaps. And the big question is, which ones are they going to be attracted to first? Is it going to be the upwards gaps or the downwards gaps? And as you get closer and closer to them, you can start to see really where the direction is going. So we do have 2 overhead gaps to fill, okay? And we have a tiny gap down on our daily chart, as well as a large gap down on TLT, all the way down to about $95, okay? So if things continue to head bearish and CPI comes out hot, now remember, they just changed CPI, okay? Not only did they revise the past 3 months and it showed that inflation was actually higher than what was projected, but they've also recently just completely redone the way they evaluate CPI. So, things are going crazy right now when it comes to economic data and financial news. And it's spooking a lot of the markets, okay? But as of now, it does look like we are on the path to our 5-wave structure. And to me, it looks like we've started our wave 3 down of 5, which is going to take TLT, in my opinion, down to this 95 area to fill this gap or get near filling this gap. Now, something to be cautious of is a half gap fill. So what I mean by that is, let's say we come down here and we fill half of this gap before we find support, and then we find support and we start rallying, okay? And we don't fill the other half of this gap. That a half gap fill is very indicative of a reversal, okay? Meaning that whether it was the buyers or sellers, they were supposed to push there and really fill that gap. But remember what the gaps are, okay? They're showing a certain side taking control. So in this case, buyers took control and they completely just gapped up over it. And there was so much demand at these levels that we didn't even come and touch these levels. So if we come down in all of that demand and we only fill half of that gap, and all of that demand is still there and still present, it's going to shoot the price back up. Now, that works for the upside as well, right? So if we come up and we only fill half of this gap, then that's going to be a bearish signal and we could head back downwards. Okay, so pay attention to the gaps. Be mindful of those half gap fills, often indicate reversals. So, you want to pay attention to that. Now, when it comes to our relative strength index, okay, I highlighted how we have bearish divergence, okay? We had, a double top right here. And meanwhile, we were losing relative strength on our RSI. And at this point right here, where we were trading higher, okay, we actually put in a bearish channel right here. So we had 2 forms of some bearish divergence. If you're short TLT, you want to see us continue to stay below this trend line now, below this channel, okay? So we broke below the bearish channel. You don't want to see a look below and fail, because if we do that, then it's indicative we could be heading back towards the top of the range, okay? So, if you're bearish on this and short TLT, you want to see us stay below there, okay, and trend downwards back towards the oversold levels. Now, we already went over the MACD. We ended up getting our sell signal right here. And, as a result, TLT has fallen. So, things are looking a little bit more clear, guys. Now, there's still a lot of work for the bears to do. All right, we have to take out this 102.94 level and really start filling some of these gaps lower, right? Most specifically, this first gap here right around 100.5. Once we do that, Okay, we're going to be closer to hitting our wave 3 target, which again is going to be somewhere in between about 97 all the way even down to 95 is really where I'm targeting it. Now, keep in mind, okay, these drawings have been here since before we've reached the price levels. Okay, so they're not exact, they're not supposed to be exact levels. This is just a, hypothesis on what the structure is going to look like and what it should look like. And it should follow roughly according to it. We did get some hiccups here with this bull flag structure that we put in, but we broke through that bull flag structure, and it looks like we are going to be continuing this downwards movement, in my opinion. Now, let's take a look at some other things, okay? Let's look at HYG real quick. This is high yield corporate bonds, all right? Now, high yield corporate bonds, they had a breakout of this larger bearish descending wedge or bullish falling wedge we had right here. Okay, so we had a breakout. Now, keep in mind what I said about look above and fails, like basically a false breakout. So, pay attention to this trend line. If we come up and we come back down into this range, into this original range right here, that's going to be extremely bearish for HYG. And it's going to indicate that most likely we're heading down to the lower structure of this. Now, we have our 3 major retracement levels here of support after this strong impulsive move to the upside. We got a nice 5-wave structure on HYG. Okay, to the upside, and we have our swing low connected to our swing high here. And look at what it's doing. It's bouncing off of the 74.70 support level, the 38.2% retracement. So, if you're looking to be short on TLT, you want to see ultimately HYG break this rising wedge, which is a bearish pattern. Okay, and if we break this trend line here, again, most likely then the initial pattern is going to be a look above and fail, and we're going to get a projected move down towards 70 to 70, 50 on HYG. Now, 74.70 is a big support level. If you're trying to go long on TLT, you want to see HYG really hold up against it, right? And you want to see us hold this level and actually push higher and continue to head up higher and stay in the upper half of this region on our rising wedge here. Now, just like TLT, okay, the MACD has been a really good indicator. We got a sell signal here, and it's been a lot of downwards pressure ever since then. The next thing we're going to look at is actually going to be TNX. This is the 10-year treasury yield. And then you need to start paying attention to this, right? If you're not paying attention to the treasury yields as well as the US dollar, a lot of the market movements are going to be confusing to you guys. Okay, so as the yields are going up, the prices of bonds should be going down. So with that being in mind, look at what's been happening here on TNX. TNX has been breaking out, guys. Now, I have been saying that I do think that I'm not even sure if TNX is going to make new highs. Okay, like let's say they keep raising rates. I'm not even sure TNX is going to make new highs. I really wouldn't be surprised if this thing just stays choppy in between like the 3.1 to like the 4% level on TNX on the 10-year treasury yield. That completely would not surprise me. Okay, now we have the major support levels here. Again, the 3 major retracement levels, all right, and these are retracement levels of support. And look at what it's doing. It's holding relatively well above the 50%. It's dipped below it just a couple times, but each time it's found strength and continued to move up higher. Now, when you look at the trend, it is bearish though, right? We have a high, we have a lower high, we have a lower high, we have a lower high. It's going to be really interesting and pretty bad for the market if this thing puts in a higher high. If we make a high here and a higher high here, things are going to be looking pretty rough in the market. So definitely pay close attention to TNX. If you're bullish and you want to go long on things, you want to see this thing really break down below 3.64 and 3.43. If it does that, that's going to be a lot more bullish for the market. Now, let's also take a look at Dixie, the US dollar. Okay, Dixie is another thing you want to pay close attention to. And look at Dixie, guys, putting in a bull flag here on the daily. It's been pretty strong as of here lately. It's definitely been in a bearish trend as well on similar to TNX, but it's been showing a lot more weakness. But right now, the past week or two, Dixie's been hot, guys, and it's been rallying up. It's up a decent amount of percent. Look at what we're rejecting though. We're rejecting our 61.8% retracement level. So if you're bearish on the market, you need to see this thing break out, and you need to see this bull flag, and you need to see the US dollar continue to go higher. But if you're bullish on the market, what you want to do is you want to see this thing continue to reject our major retracement level of resistance. We have our swing high right here connected to the swing low, and this could just be a healthy retracement ultimately for the continuation lower. And as the Dixie is falling and as treasury yields are falling, you're going to start to see stocks and bonds go up. All right. Now, we'll take a look at one more bond. We'll take a look at ZROZ. Okay. ZROZ. All right, and if we look here, similar to TLT, this thing almost put in an M pattern right here. It almost had a double top, but it actually came up and filled the gaps. Now, this is what I mean, guys. Look at the gaps, okay? So we had all of these gaps since the last time I charted up ZROZ, and look what happened, right? We had strong price action gravitating towards these gaps. We didn't get half gap fills on none of them. We blew through, and price action was just very attracted to all of these gaps. We ended up filling this gap, and once we filled this gap, all right, that's when we ended up starting the reversal back downwards. It's currently above its major retracement level of support, which is 92.66. So just like TLT and some of the other things and HYG, if you're trying to go bullish, okay, you want to see us hold above this level and continue to push up higher. All right. But if you're bearish, we need to break below 92.66, 89.78, as well as 86.89. That would bring us closer to getting our M pattern, the double top pattern. And we do have a daily gap down here as well to fill right around $88.63. So that's going to be it for today's video. Hopefully you enjoyed it. Hopefully you learned something new. If you did, smash that like button, subscribe to the channel, and I'm out.